How's it going, everyone? Welcome back to another video. So I'm gonna go over the Ichimoku theory first. I'm gonna pull up the indicator in a second, and we're gonna use it and backtest today. I'm gonna backtest Tuesday the 18th with it, and then I'm gonna go over some predictions. So I'll cut right to that to keep it quicker than usual. Cut it all the way back to the beginning of Tuesday. I'm on the 1 minute chart because Ichimoku is more about short term and just short term momentum, like shifts, and short term support and resistance zones, key entry points within that time horizon. And it's also going to give us an indication on market sentiment overall. And that's kind of what the theory is targeted towards. It used a collective of 5 indicators, span A and span B, the relationship between those two indicators. It has this thing called a conversion line and a baseline, the relationship between those two indicators. And then it also has one individual indicator called lagging span, which is an indicator that's an offset of the 26 EMA. And as you'll come to see as I go over each part of the overall indicator, because there's 5 indicators within Ichimoku trading, right? And I'm gonna, as you see, you will notice that they're pretty much just moving averages. Some of them are precise, some of them are offsetted, and then one of them is just an offset overall EMA that has no relationship, but it's just there, right? So I'll pull up what it looks like, and it is very confusing. And don't get intimidated, right? So I'll let it run for a bit so you can get a visual of what's going on, right? So I can start that there. So span A are these two lines, which create what is called, and probably the largest component of the Ichimoku indicator. And this is these two lines here, span A and span B. And they're basically the offset EMAs and the relationship between the offset EMAs and the support and resistance zones they create in relation to price action. So you can assume that if these zones are above price, currently there's a bearish trend. If price slips into the zone, currently it's picking which direction it's going to go. And then like the crossing would be a point of entry, for example, right? Like you can see this cross right here. You could get in long, hold red for 4 minutes, and you'd be green, right? So those are cool things to pay attention to. Span A and span B, we can take a look at them. So I'm going to pull up the indicator, and I'm going to highlight each one as we go. So I'm going to go over span B, and I'll highlight the green of that, and you'll see what span B is there. And then I'll also go over the red of span B, and you'll see that this line, this highlighted line right here, span B. And just look at from historic data, what is span B doing a lot? It's far away from current price. It slips underneath price on bullish momentum, and then it stays above price. It slips underneath price on bullish momentum, and it stays above price on bearish momentum right here, right? And then it like trickles up, and there's like a larger gap between price and span B, and that's like showing that it's in an overall current downtrend. But you can kind of see after we played this, that span B is trickling downward to tack below price. And all you got to pay attention to for span B is that it's a 26 moving average. So if I pull up a 26 moving average, the moving average would simply be below price, and it would deviate further away from a closer EMA, which is span A. And you can assume that's just a smaller EMA, like a smaller, rather than the 26 EMA, which is span B, an offsetted 26 EMA, which is span B. I can pull up span A, and you can kind of see that line is much closer to price, and the relationship between it is more like volatile, like it reacts to price more, whereas a longer term EMA doesn't react much. It just evens out. And you can kind of just tell by the size of what span A is doing, right? You see span B just sit flat through all of this. It's just chilling. So you can put a visual in your head that span B, since he's been around longer, he's not going to react to swings as much, but he can indicate to you if he's above price, then we're in a bearish trend, and if he's below price, we're in a bullish trend, right? And since span A is the younger cat and he's like younger, right? He's gonna be reacting crazy to all this new information and data, right? He's slipping underneath like crazy, and then he gets closer to span 26 EMA, right? Span B, and then as soon as there's some momentum, right, he trickles, and then he hugs price as soon as you see a little bit of bullishness, and then it slips below price like crazy, and then it bounces up together. They're even. He's chilling with 26, but you kind of get the idea. Span A is more reacting to price simply because it's like a 9 EMA, and then span offsetted, and then span B is like a 26 EMA, and it's not going to react as much because it has more candles of data tracking its average. But what makes these EMAs very cool is that they're offsetted, and they're offsetted to a point where it can give you a future indication of where price is going, right? And then I can unhighlight those so it doesn't make my screen more bold or confusing. So I'll just reset settings to defaults, and then I'm gonna highlight each like other line. So first I'll highlight the conversion line, right? I'm pretty sure the conversion line here. Let me look at it real quick so I can get like an understanding. So yes, that would be the conversion line. And the conversion line is basically the average highs and lows in a time horizon of 9 period points. And so that e.g. 9 candlesticks. So it's basically a more precise 9 EMA because rather than just the average price of 9 candles, it's the average of the highs and lows, right? So that would be the red line for this indicator. And then I'd unhighlight that, right? Put it back to like the regular size. And then the other line, right, is the baseline. And the baseline is, as you probably can guess, is the 26 EMA. So as soon as there's like a large shift in movement and you see like all of these candlesticks, the past 26 candlesticks have been sitting right here, right? And if I pull them up together, they're both very reacting at this point in time, right? They both dip up together. And you can kind of see the 9 EMA dip up a little bit more reactingly, and then it also swings down more. So it's more reactive to it. But the baseline is it's pretty much a larger time frame moving average, but it's more precise moving average because it's the average highs and lows of the 26 period point, right? So just like the same information for the conversion line and for the baseline there. And then the last bit, which we don't really need to pay attention to, but it is there, and I'll give it like a purplish color, and that is the lagging span. And the lagging span is like from from like from 60. You can kind of see the lagging span indicate where price was or like where it went, right? The idea of the lagging span is it's going to give you like an offsetted 26 EMA as well, right? So when like prices up here, it's tracking pretty much the momentum of price, like right all the way over here, 26 wise, like 26 candles, 26 minutes. I don't know how far, but that's basically what you'll get if you read up on that. So it's slipping into this resistance zone and it creates this large bullish candle here. And I'm about to backtest this now. I could see it completely reject it, but since this zone is trickling downward, I'm assuming it's going to form a zone of support with span A and B. But as of now, I can see it having some reactant momentum downward from that. There we go. So I'm going to get out for a second and let it run and place regular trades now. So now we see support building after this dip, and prices. It's going to attack the cloud, and the cloud's sitting above it. So I think this would be a good time to go long, right? Take profit a little bit before it goes too red. And this is a minute chart, keep in mind. Okay. I think I'd get out there. So you can kind of see this zone of support. Well, it's resistance now because it's sitting above price. The clouds are. I'm not really paying attention to color at this point. But as soon as price converts over the cloud, that is an entry point. And I'd say I could go long there, right? And be smart and only take like a few minutes at a time. Breaks below it. So now the zone of interest is above it, and that's acting as resistance. But you're seeing that this cloud is consistently dipping down. So if I see this cloud dip a little bit more, that's why I'm getting long. Okay, there we go. You see it dip down another level, right? So now, hopefully, it can hold above this cloud with this new momentum trend going on. And if it holds above the cloud, that means there's overall support towards it, but it's not really doing that. This bearish trend is killing my trade. And if I wanted to mitigate profits, I'd probably get out. But I'm on the 1 minute, so I know I could hold this for an hour at least. So I'll hold for another 15 minutes. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Okay, I'd get out there. Wouldn't trust that. Or I'd average down. My thing was completely wrong, even though it was dipping. But I'd say it hit a bottom here, and it's deviating away from the cloud. So I think a crossing would be a good point. To stick to just principle, crossing would be a good point. Either price crossing into a zone above the cloud, and whenever you don't really want to trade when it's in the cloud because that lets you know price is indecisive and it's currently looking for a direction. And once it picks a direction on whichever side of the cloud it picks, that would be a good point of entry, I think. Okay. It picks that. Get me in profit. Let's get all that money. Just place a bunch of buy orders. There we go. I think this is a good zone of support here. I do not see it going any lower. I'm just going to hold on a few. So I've got the crossing here, giving me a very bullish indication here. I can get scared since it's attacking the zone, right? So get out, and I can go short. I'm going to go short until it gets inside one of these zones, right? Okay, went inside that zone. I probably could have held longer for more profit. But reactant-wise, it's going to attack it, and then it's going to go up, I feel. There we go. Yeah, I'll get out completely. It seems like it's picking direction within the zone. You don't want to be in a trade within the cloud. So this will give you a time horizon of when you think you should get out, which is kind of cool about the indicator I have. It's not part of the original Ichimoku. This is a part of the extension of the person who created this, which is Lux Algo. So it seems like a picking direction again, but I shouldn't be in for a while because the next cloud is bearish. So at the top of that, I can go in short, I think, which I'm completely wrong. Not really. No, I'm right. Bullish again. Bearish. Come on. I'm expecting a little bit more bearish momentum here. I'll see how close I can get to breaking even, just to be smart. Yeah, nah, I'm not waiting that. No, I should have. For a second, though. I wouldn't have known. So I see the bullish cloud forming. After this downtrend, some bullish momentum. There we go. I'm buying too fast. I'm expecting, okay, so here's what we're looking for. A perfect setup, for example. We're going to expect price to make a crossing at a moment of entry where price is also sitting like above or below a cloud after testing it, right? So I'm looking for a crossing here soon. And I'll make an entry depending on the crossing with span A and span B. So it seems like span A and span B are crossing here for bearish. There we go. See, perfect entry. And that's a good example. That's a perfect example of what to do with this indicator. You're looking for a price to deviate very far away from the cloud, and you're looking for a crossing with the future indication given from span A and span B. Once that crossing is targeted, and then you also see that it is a small cloud of support, depending on it being support or resistance, and then it slips below or even into the zone, but it's obviously picked a direction while its relationship with the zone is like still considered like supported, right? It slips into one direction after slipping in, it picks a direction, and then you also see the crossing. Here's another entry. I can go bullish here. Should have got out, but greed made me greed. But you can kind of see that that was enough to. So look, with that second trade there, let me get out. I don't care how much it goes up. But with that second trade there, It picks a high and then it consolidates downward, just looking at price alone. But while it's up here, it has a crossing already in terms of span A and span B, and that being a bullish crossing, given that the next cloud is green, right? And given that that next cloud is green, after this consolidating point, I could be in long, knowing that the future indication is that it's sitting at the bottom of what was considered like resistance, and that resistance is turning support, giving this crossing that's holding a level right where price is at. And I'd say that this level right here, it highlights the amount of volume and volatility when price is in the cloud. So watch. We'll look for a crossing. We'll look for price to slip into a cloud and watch what direction it picks at that crossing and it's slipping in the crowd, and we'll make our position. So I'm looking here and I'm looking at price on the 1 minute. So it would damn near be moving this fast. It crossed, right? You see that crossing? Short. There we go. Quick entry. Perfect, right? Crossing, long. Long, right? Perfect. Get out. Profit. Look for another crossing. We'll go over this a few times. Well, actually, one more. And I'll cut to predictions. It's holding this bullish trend. If I'm looking at price, I'd probably be getting in long here just from price alone. And then you see the cloud expanding. We'll see it test the cloud. And because of the amount of bullish indication it's getting, wait for one large bearish move. And then we'll get in long. Overnight, we wouldn't be able to do calls on this. God damn it. Freaking 1 minute. Let's see if we can speed this jolly boy up. Oh, great. 70%. Well, it has an average of an 80% win rate because just from the indication alone. So I think I used it pretty well. All right. Hope you guys enjoyed that. I'm glad I kept it short.